Welcome back to the channel. It's me, Adam, and you're watching Unlimited Options Investing. Disney stock today was down 4.17%, down suddenly in the middle of the trading day because of news as the CEO projected lower fourth quarter subscriber growth than estimates. Disney CEO Bob Chapek warned of headwinds on subscription video streaming growth in the fourth quarter. He also noted that production slowdowns caused by the Delta variant will lead to a lighter slate of new programming than Disney had originally projected, and Disney shares fell more than 3% after his comments at the Goldman Sachs Communacopia conference. We're going to be taking a deeper look at Disney on the chart as well as the rest of the market, including crypto. Before we do, if you haven't already, hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, and options, and we're investing for the long term. As well as always, smash that like button and let's get started. Firstly, taking a look at the S&P 500, it sticks out like a sore thumb in the middle over here. Disney down 4.17%, whereas the rest of the market was pretty much trading sideways, technology sideways, financials, banks, healthcare, consumer defensives, everything pretty much sideways, whereas on Monday, everything was bloody red, so a lot less volatility today. Whereas, as we'll see in a second, tomorrow's news, the Fed will try to soothe markets Wednesday while preparing investors for end to bond buying. So as we'll see in a second on the charts, they're set up to see how to react or how big money wants to react to whatever the Fed has to say regarding the markets and the macroeconomic conditions. So the market's set up now, as we'll see in a second on the charts, how it wants to react to Fed Powell's comments on Wednesday. So let's take a look at the charts. So the first chart I want to take a look at first is the VIX, which is the volatility of the S&P 500. Essentially, people call this also the fear index. And zooming out, we can see how volatility and fear spikes suddenly, and then it rests a little bit, and then after a while, something else spikes it again, and then it repeats, so on and so on. And what's really cool when it comes to stocks and charts is that it doesn't just apply to companies. It applies to Forex, crypto, precious metals, and even volatility and fear indexes. So this is something that was really, really cool to me, actually, when I first started looking into the market, is how just charts and data tell you so much and break down like our tendencies and our and like we don't really recognize these things always consciously, but a lot of our actions are determined by our emotions, including our financial ones. When you take a candlestick chart, it can really break it down for you so you can make more logical decisions instead of succumbing to your emotions. And you can also determine your supports and resistances, which are really cool as well. Even though they don't apply to sellers and buyers per se, the analysis still does work. So on Monday, when the S&P 500 fell, the VIX gapped up and then it spiked all the way to about 30 and then closing at about 25. And zooming out at the 30, you can see that there is about a resistance point over there. So it makes sense that it peaked and then fell down. So now what I'm interested in is after Fed Powell's talks, if the market doesn't like it and the market falls, this could spike and potentially break the 30. But however, if there isn't much volatility after he speaks, then it could fall back to these averages over here. And stocks looked like they were going to recover much more than they did today, with the S&P 500 opening up, going up a little bit, and then closing, going down, even though it was up on the day, with the Dow Jones as well. Just similar candles. It looked like it was going to be promising, but it went down, as well as QQQ going up a little bit, and then ended up closing lower than it had opened. Taking a look at Bitcoin at about 42,500. It had a sell-off over the last couple of days, but it looks like it's recovering. It needs to hold this $40,000 mark or so. Then it could fall maybe to the next point of 38,000, and then maybe not 35,000, and then 30. So we'll be observing that over the next few days, as well as Ethereum. Same kind of story, just flirting underneath that $3,000 mark. So we want to see some kind of recovery. If it keeps falling underneath these 3,000, then we can see potentially maybe even 2,500 next stop. Now taking a look at Disney stock. So today it opened up around $180 and fell all the way on that sudden news to $169, closing just above at $171 or so. When we zoom out, we see that it is near previous support lines of about 170, where we had buying pressure before, around here, maybe in July and a little bit below back in May, when we had the market bottom for a lot of stocks, and even at times back in January and December of last year. So this is the daily chart, and zooming out and looking at the weekly, we see that as well it's sitting near the 50 EMA, so this could be a potential buy zone for Disney. if you are bullish on the stock long term. If it does break this 50 EMA, it would be really ugly. Maybe falling as low as maybe 150, which is roughly from here about 12% down from here. So it could be very ugly if it does break the support. Maybe even some pressure here around 160. If not, it would be 150 or anywhere in between. It's not very clear as there isn't much data. But as a long-term investment for Disney, it's as cheap as it's been all year. So a lot of investors are freaked out because of Disney Plus's numbers going down as the pandemic ends, and everyone's at home right now, but then once people are going out, they'll be enjoying things other than watching Avengers all day. But what we have to realize is that Disney also is a conglomerate when it comes to their parks and cruises. They're not a one-dimensional company like Netflix is, which is why I like Disney over Netflix, and you're only paying maybe like $50 billion more in Disney than you are for Netflix, and you're getting so much more. But when it comes to the technicals and the charts, again, it's trading as cheap as it has all year. It just depends on if you're willing to take the risk of if it falls all the way to 150 or 140. Can you stomach it, and can you buy more on that dip and hold it for the long term so that when Disney eventually beasts and becomes that company that it's going to be, that you held it and didn't sell at the bottom and then buy it as things are going up and then sell at the top and so on and so forth. And remember, as always, risk management is always one. Otherwise, that's the end of my video. Guys, let me know in the comments below what you think of the markets and Disney stock. As always, hit subscribe, hit that like button, and I will see you guys in the next video.